Everybody, Trevor Hall here with Mining Stock Daily. It's about once a year I get the opportunity to sit down and chat with my friend Grant Williams from Things That Make You Go, And this is the first time I get to do it in person.
This is right, yeah. We've done this virtually. I mean, that's the world we live in now, right? We've done it virtually for a while now, but it's good to actually get a chance to sit down and chat mano-y mano.
I know. Well, you've been doing a lot more in-person interviews with the video series you've been doing for your subscribers as well. You know, as somebody who's just, I be honest, I'm pretty envious with the business that you've created and the dynamic of which you put yourself out there and interview these people all throughout the financial walks of life. But when you started doing the video stuff, those long forms, like, was that a change for you? Like, was that a challenge for you to kind of change into a new medium?
No, I don't think so. I think because I started doing those during my Real Vision days,
Sure.
and those were the conversations I was really interested in. Because look, we can sit and talk about markets, and it's always fun to do that. But the process of recording a conversation, editing the conversation, and then releasing the conversation, there is a gap between those two things. And if you're talking about current markets, anything could happen in the interim there, right? And you could end up with obsolete content. You could end up with a positive story for a company, particularly in the resource sector, right? A mine could have flooded, anything could have happened, and a positive story could have gone to a negative story and vice versa. And so for me, during my days at Real Vision, I was really focused on creating content that had time value, that you could listen to in 10 years from now and it wouldn't be obsolete, because that to me is really valuable. So I set out to talk to people about their lives, their careers, and most importantly, the lessons they learn, the mistakes they make, because that kind of stuff is applicable to all our lives. And if you and I can talk about your career and you can say, man, I made so many mistakes, this is what I did wrong, and this is how I dealt with it, and this is how I fixed it, that information is valuable to so many people who might one day hear that conversation and then find themselves in a position to go, geez, I remember what Trevor said about this. The mistake he said I really shouldn't have made, I'm just about to make that mistake. So I've just gone back to doing those and finding interesting people who have a story to tell, have done interesting things, who've made mistakes, who've been successful, and tried to tease those stories out and the lessons out of them. And whether they're household names or people no one's ever heard of, it's the stories that are important. And so the thing for me is to find a way to build an audience that trusts me, so that if I say, hey, here's a 3-hour conversation with a guy you've never heard of, the instant reaction is, why would I listen to that? But if I do my job right, people are going to think, well, if Grant thinks this guy's worth 3 hours of my time, I'm going to listen to it. And if you do, you're going to hear stories of people who've done extraordinary things away from the limelight, and success, failure, all this stuff. And so for me, that's just really valuable information to have and lessons to learn that might save you an awful lot of time and heartache.
I was kind of like laughing in my head, and I was like, what if Grant Williams one day called me up and wanted to do this video with me in my house? It's like, well, instead of like going to this like beautiful home in Spain or in Vancouver, he'd walk in and have to kick the folded clothes out through the hallway because the life is completely different.
Trev, this is the interesting thing, right? Because none of that stuff matters, right? It's great. I mean, some of these places I've filmed are wonderful, and the backdrop's always great. It looks good, but at the end of the day, the drone shots and the houses and all that stuff, it melts away, and you're left with someone telling a story, and no one's going to sit there for 3 hours engaged in the house behind them, right? Yeah. You get brought into people's world and get brought into their story, and those stories are immensely compelling, because these people, everybody I've interviewed has ultimately been successful, but they've all suffered along the way in ways that are extremely valuable to learn from.
Yeah. Do you remember the show? Are you familiar with the show Cribs on MTV?
I'm showing my age. I've never watched it, but yes, I know exactly the show you mean.
You could do a spin-off.
You think? You think? Yeah, no, I'm not sure. There's not as much flash in the places I've filmed. They're beautiful places, but I haven't seen any gold taps or antelope skin sofas or any of that kind of stuff going on.
So let's talk a little bit. Well, let's actually talk a lot about markets and the state of finance and global economies. Because I only have an hour with you, and that's and I could probably take up 3 hours, and obviously can't do that. But there's a number of different bullet point items I want to cover with you. And maybe I piggyback a little bit. Last week we heard my conversation with our mutual friend Julian Brigden. He has a very kind of, I don't want to say pessimistic, but a scary outlook of the global economy. Yep. And we are seeing the hysteria in the yield curve, specifically on the long end.
Yep.
How are you approaching this? What's making sense, and what is absolutely completely batshit crazy that doesn't make sense?
Well, most of it doesn't make sense, really, if you think about it. If you strip things down. And I had dinner with Julian, and so he and I got a chance to talk in person, which is great. I think Julian's fabulous. Right? He's such a smart guy. He's great fun to sit and chat with. Yeah. But the interesting thing, what you said there, I think is actually really important. You said that Julian had a scary, pessimistic outlook for the economy. And I think what's happened over the last 40 years is the idea of pragmatism is gone. Things are either great, which we've become used to, or they're scary, or they're pessimistic, right? And people have lost this. Yeah. People have lost this concept of Julian's being realistic about the economy. And I always catch myself if I'm thinking someone's being pessimistic or optimistic. I just try and step back a minute and say, look, let's put those pejorative terms out of the way. What are these people really saying? Just because they think things are going to be potentially fractious going forward, does that mean they're pessimistic, or does it mean they're actually taking a realistic look at the data and interpreting it? And that's what I think Julian's doing. He's looking at the outcome, and for the first time in 40 odd years, we can look forward 2 or 3 years and see an awful lot of storm clouds. Right? There have been periods where, like 2008, where we had this really short, sharp event that was just chaos everywhere, and it was really gloomy, and it was really doomy, and people lost their jobs and their houses and all the things that are really pessimistic and really negative. But we've had central banks stepping in at every point in time, and so if you've been looking at markets, you could look through the pessimism and say, but yeah, things look bad, but the central banks will come in, they'll cut rates, they'll buy bonds, and so I'm going to buy the dip. And that's how this whole buy the dip mentality has kind of been fostered, for good reason. I understand perfectly why it's happened. The change now, I think, and Jay Powell has desperately been trying to get people to listen to him. He's slapping markets around the face and saying, I'm keeping rates high. Please believe me. You believed me when you didn't believe me when I said, that we weren't going to cut. You kind of front ran that, and you wouldn't listen to me then. You eventually got the message, and then you took it too far. And now you think that we're going to cut every time there's trouble. We never had inflation to deal with before. Now we do, and it's different. Things are very different now. I think he had that great line the other day about, we're navigating by the stars under a cloudy sky. He said that out loud. And for the chairman of the Fed to say out loud, what we all know they do, right? They are navigating by the stars, and the skies are cloudy. But for him to say that out loud, he is trying everything he can to get people to understand that things have changed. Rate cuts will come because they always come. It's a cyclical phenomenon. But they're not going to come at the first sign of trouble. And the trouble hasn't hit the markets yet. So I think Jay Powell would love to have a nice, gentle recession and a nice, gentle bear market that takes the equity market down slowly and gently, 20%. And unemployment goes up a couple of percent, and the froth comes out. That would be wonderful for it. Yeah. We all know that doesn't happen, right? And the longer the markets ignore what he's telling them, and the longer they stay elevated, the longer they ignore the bond market, and they feel like the equity market's right, the wake-up moment is going to be much more brutal, and the drop is going to be much more precipitous, because suddenly this realization is going to dawn on everybody, and it's going to be a run for the exits, right? And we'll see some kind of panic.
A run from the exits in all markets, from the equity to the bond market.
Well, we've kind of seen that in the bond market, right? We've seen that, and for some reason, Julian and I, when we sat at dinner the other night, we were talking about how the whole "this time is different" thing. It comes and it goes, and every time around, someone will find an excuse. But the things people are saying no longer matter. Things like inversion of the yield curve, right? The people are saying it no longer matters, right? Because the transmission period of that happening to us being in a recession seems to be longer this time, right? And so because it's longer, people are saying, see, it doesn't work anymore. It works. It matters, right? The cost of capital in the short and long term matters a great deal to the economy. So the market lag in terms of signals that generally portend recession, portend market crashes, are being ignored. And they will be ignored until they assert themselves. So this chaos we've seen in the bond market, the weakness in the bond market, the incredible mark-to-market losses in the safest asset on the planet, which everybody's been forcibly herded into, by the way, should have sent signals to the equity market that you need to take your multiples down, you need to take your estimates down, you need to revise everything you think about what the stock market's valued. And if you do that, the price is much lower than here. But they're ignoring it.
Exactly.
Yeah.
But how much of this is part of because the amount of money that was pushed into the system in 2020, 2021, how is that having an effect on the longevity of this waiting for a recession? I mean, did you play with that in your head? Like, is the reason that prolonged distance for recession from this inverted yield curve, how much of that has to do with just the gobs amount of money that was put into the system, and on top of that, the returns from the equity market over the last 3 years?
Yeah, for sure. Of course, I mean, how can that kind of amount of money not matter? It matters a great deal, right? And we're seeing that. We've seen it filter into everything. But everywhere you look now, you can see that wearing off. You know, here in Switzerland, you and I are sitting down in Zurich talking about this. This time last year, if you went to any one of the 75,000 watch shops in this town and tried to buy a Rolex, good luck. No chance. Now I think you'll be able to get a Rolex if you went in there. It may not be the exact one you want, but a year ago you couldn't get any. Not one. It didn't matter what. If you said, I'll take any Rolex you got, no chance. Now they'll have stock. You know, cars, same sort of thing. You know, we're starting to see car prices come down. Both new and used prices are starting to come down. We're starting to see air pockets in housing. We're starting to see offered prices in houses getting slowly ticked down. You know, the UK last month was the biggest 1 month price cuts that we've had in, I think, a decade. Now, it was 1.5%. It's not much, but it's the start of all this stuff, all this froth coming out in the economy. And the reasons are pretty straightforward, right? You can put your money in safe, risk-free assets now and get 5-6%.
But how risk-free are they anymore? That's a huge question.
The 30-year bond, I would say there's more risk than the. But you don't have to go anywhere near that, right? You can take a few months of risk and get paid 4 or 5%. You can take a year or two of risk and think you're perfectly fine there and get 5-6%. Corporate bonds, there are plenty of really good companies out there. You can get really good, safe returns. I mean, obviously, risk-free is a misnomer, but there are ways to take very prudent risk on debt and get paid to sit and wait.
Right.
And I think that's slowly starting to filter through. I mean, people got a shock in the bond markets because of what happened back in March when Silicon Valley Bank went under, and we saw the reason why was those mark-to-market losses, and that kind of spooked everybody. But here we are. We've got the CPI ahead of us. People are talking about maybe it's going to moderate. But everywhere you look in terms of the economy, the reasons for rates to stay higher for longer are very, very clear. And so we're at a point now, and I'm just writing a piece about this. It's I'm likening it to bullet time in the Matrix, right? Where you have this moment where all this stuff happens, everything's coming at these bullets are coming at you really fast, but Neo has the ability to just kind of slow everything down and move out the way and bend and it feels like we're in a kind of bullet time period. All this stuff is happening, but we haven't seen what it all means reflected in markets yet. So investors still have time to be like Neo and kind of just look around, look at
maneuver
the data, understand what it means, and not say, well, because the market hasn't reacted, it doesn't mean anything, because that's just the wrong way around. The tail is wagging the dog.
Yeah. I've had a couple of discussions here in Zurich with some of these mining companies. We had And in the mid-tier space, we had news this week of an acquisition of a developing company in Newfoundland. Listen, this company had, last I understood, like $100 million cash in the bank. But the conversation kind of led into, okay, how does a resource company that's actually producing, how does it stay competitive for investment dollars when you can buy a 2-year at 5%? And that's a whole different conversation because you're no longer looking for capital, the same capital from the same pools of money as the rest of your competitors in the space. You are now looking at, a U.S. Treasury. So if you are a company with a decent balance sheet in the resource space, do you have to reconsider what that competitive landscape is for capital dollars now?
Look, everybody does, right? Because the cost of money is arguably the most important price on the face of the planet.
Sure.
And it's changed. And everything is priced off that. So different sectors get more love than others. The junior resource sector gets no love, right? As you and I well know, right?
Zero love, right?
Zero love, right? But what we do know is that when there's a tailwind behind the metals prices, people fall in love with the miners way too much, right? People just stalk them, right? It's that kind of sector. It's feast or famine. And the old saying, there's no fever like gold fever, is absolutely correct. And so even though you've got this kind of 5% risk-free return if you want it, and that in the short term will starve a lot of companies of capital because people won't want to take the risk. If all the things happen that people expect to happen, and I fully expect to happen in time in terms of QE, we could go into the budget deficits, we could go into the fiscal situation of the US.
It's a mess.
It's a complete mess, and everybody knows it's utterly unsustainable. So, and if Stein's law, if something can't go on forever, it will stop, and this cannot go on forever. So it will stop at some point, and when it does, the response is going to be to cut rates and to do more QE and all these kind of things that we know will happen. This time around, however, I think it'll be very different for precious metals because you do have inflation on the other side of this now, which is holding central bankers' feet to the flames. And so as much as they might want to cut rates and buy bonds to stabilize risk assets, on the other side of that, you are going to get energy prices going up, you're going to get food prices going up, and you are going to see that reflected in inflation. And we are, if you want the third leg of the perfect storm, we're going into a US election year next year.
Oh, that's on the bullet list of things to talk about.
And so because you're going into an election year, inflation is the biggest no-no of them all. Because no matter if you vote left or right your whole life, but you have double-digit inflation at the time of an election, you're going to vote the other way. This guy out, other guy in. I don't care what his colours are, I don't care what his politics are. I can't feed my family. Get out. And so they can't let inflation get out of control next year. So you've got all these things lined up, and so I suspect what I think will happen is when they do get to the cutting rates thing, which I think will be later than people expect, but it'll happen, and they do get back to QE and they start printing money again, it's going to matter to precious metals a lot more than it has before. We all thought, when they start printing money, gold's going to go through the roof, and it didn't, and it confounded a lot of people. But it didn't because there were other things that people could speculate in, and there were other things.
You were buying tech. You were buying calls and tech.
Yeah, right, exactly right.
Sure.
This time around, I think you're going to see that those valuations are going to suddenly be looked at, and the stuff that's trading on 50 times revenues and all this lunacy that we saw in 2000 is going to get quickly debunked. And I think the place people are going to go is going to be mining companies, and then you'll see it doesn't matter if I'm getting 5-6% with a risk-free asset. There's a 10-bagger in one of these gold mining companies. We all know the fever, right? And that's what's going to happen. But you've got to be patient, and you've got to not fall in love with these companies too early. And you've got to understand the asset, the jurisdiction, the management. Those three things are crucial. And understand which companies you want to buy as and when the time is right to buy them. People, they go in too early, they double down too early, they go all in too early.
Or too late.
Or too late, too late. It's a great point. But it tends to be that greed, and we come back to these stories we were talking about at the top of the conversation, right? People love stories. That's why I tell these stories in my interviews, because people have learned to connect through them. And the stories that every single gold mining executive has to tell is always a great story, and it always appeals because the story is as old as time. I'm going to pull rocks out of the ground and you're going to get rich.
Well, I mean, listen, I've made a career out of telling those stories,
Right.
because I love those stories, and I love the people doing such fascinating work. I mean, some of it's not so fascinating, don't get me wrong, but I mean, it is good. I mean, a lot of honest people doing the best they can in a market that is not supporting them, but they're keeping their head down and doing what they can. I do want to kind of talk about this election a little bit.
We have to.
Because I don't think, in the back of my mind, I'm kind of playing this out, like, I don't see a situation where whoever the nominees are going to be, whether it's a Biden, Trump, or heaven help us, somebody else Trump or somebody else Biden, who God only knows, anything could happen next week or next month. I don't see a situation where either the incumbent party or the opposing party are in favor for higher for longer, because everybody's getting hurt. Their contingencies getting hurt. Their voters are getting hurt. I don't see a situation where this higher for longer doesn't get so political, and there's Jerome Powell's with those handcuffs getting a little bit tighter and tighter and tighter.
Yeah, for sure. But think about that. The higher for longer is a problem for everybody, right? But if you're a political party, you have to figure out, okay, how do we win votes in a higher for longer environment? And there's one really, really obvious way that you win those votes. It's going to be higher for longer for guess who? The rich people, right? If you're rich, it's going to be higher for longer, and we're going to tax you, and we're going to wealth taxes, and we're going to tax expensive real estate, and we're going to equalize the fact that costs are going up by taking from the rich and giving to the poor. And you have in America now a divide between the two, which is unparalleled. Maybe go back to the 1920s, but the rich class back then was much smaller than it is now, because of booming equity markets, because of stock options, because of all these things. The millionaire class is now massive in America. The problem with that is the man in the street is an extraordinary amount of money. Let's say whoever comes in and says, right, we are going to tax anyone who owns a house over $5 million. We're going to do a one-time 10% windfall tax on the value of your property. You can't move it, you can't hide it. It's easy for the government to do, right? And maybe we'll come up with a payment plan. To 90% of the population, if you own a $5 million home, you are off the charts wealthy.
Yeah.
The reality is a lot of the people who own those $5 million homes have $4 million mortgages on them because money was free for so long, and they don't have the money, right? They can't afford to carry a $5 million home. They wanted one, and they could afford the monthly payments like they could their two Mercedes in the garage, right? But with rates where they are and the mortgage rolling off at some point, they're screwed. Yeah. So, there is going to be an attempt to redress the balance. There is going to be an attempt to level up or equalize or whatever the cute slogan's going to be. But ultimately, the only solution to the situation we have now, and we talk about the United States, but it's the same in Canada and England and Australia and France and all these countries, right, all these Western democracies. The reality is the only solution to this problem, the only solution, and it's been the only solution for a very long time, is a massive wealth transfer from the people who have it to the people who haven't. And what's happened the last 10, 15 years is they've been trying to create wealth out of thin air and distribute it as best they can. We all know where it's gone, right? It's gone into asset prices.
Well, they've done a good job of half of that.
Yeah, right? It's exacerbated the problem.
Yeah.
But when inflation comes back and your ability to print unlimited amounts of money goes, you still need money. And the only way as a government, the only income you have is tax receipts. So if you need to increase your revenues, you have to increase taxes, period. And so they are going to do that because they're going to be forced to. And if you're going to increase taxes, you better make sure you're seen to be increasing on the rich much more than you are on the poor, because we already have a level of subsistency in America which is frankly shameful. Right, the number of homeless people, the number of people living below the poverty line for America in the 21st century is shameful. And again, we're talking about America. You can level that accusation just around anywhere in a Western democracy. You want to point your finger around the map.
Right. Well, that, while you were explaining that, is like, this is like the dagger of financial repression.
Yeah.
But not just directing where you can put your capital or in what you can put your capital. I mean, this is taking the upper class, that upper 1% or whatever percentage it is, and really tying their hands behind it.
Well, I gave a presentation. I think it was this conference last year, and I've given it a couple of times since. And I made a point during that presentation. I said to everybody, listen, I said, look, if you've been invested in the stock market, you already got rich.
Sure.
Right? You got rich. Just if you just had an index fund, it doesn't matter. If you just had money in the markets, you got rich. Now you've got to think about, how do I stay rich? Because what's happened over the last certain amount of years, everything has been geared towards helping you make money. And what's going to happen over the next period of years, I don't know if it's 1, 2, 3, 5, 10, I don't know, but it's somewhere in there. It's a meaningful period of time. I doubt it's going to be 1. If you ask me to pick between 1 and 10, I'd take 10 all day, because it takes that long for these kind of imbalances to get redressed. We are going into a period where there are going to be people, and by people I mean politicians, actively trying to think of ways to take your money away from you now. Because you've got too much, you shouldn't really have had it in the first place. There are other people that weren't so lucky, they haven't got enough, and it's our job as the government to make sure there is equality and inclusivity, and that includes with wealth.
But does that happen on both sides of the aisle? I mean, because that sounds like something you'd hear more from the left.
I totally agree. But look how close left and right are. If you think of it as a circle, right? They're actually very, very close. Look at what's happening on university campuses in America, right? The left are the fascists now. And so left and right is going to blur significantly. And what people think of as far right, you don't tend to see the words far left used in the media at all, right? Far right is anybody an inch right of centre, and then it's left. But you're going to have to rethink what that means, because left and right is I think going to morph into haves and haves not. That's the politics. It's going to be rich and poor, have and have not. 1%, 99%. That's going to be the new politics, because the politics is going to be around money and who has it and who doesn't, and how do we redistribute it. And whether it's the left or the right, they are going to be forced on the right to abandon some principles if they want to be in power, which they do, right? End of conversation. It's all about power. And I guess the worry is that the left will get much more grabby much more quickly, and much less thoughtfully, I suspect, than the right one. And that's not to say either side is better than the other. I think every politician in the world is absolutely abject at the moment. I can't see any leaders anywhere. It's depressing. But the common cause that whoever's in power is going to have is, how do I keep people in their homes and not burning cars in the streets? And the answer is, you make them feel comparatively wealthy. We saw in the UK yesterday, wages are rising faster than inflation, finally, which is great, because workers have decades to catch up on. But if you think that's going to help the fight against inflation, it isn't. So things are starting to happen that is moving the needle back from capital towards labour, where it needs to go. But that journey is not going to be gentle, and it's not going to be without significant upheaval. And as I said, if you've been invested, you've got rich. So now it's time to think not about where's the next 10 bagger. Is it in the miners? Is it in tech stocks? It's, how do I protect the wealth I've accumulated over these last 20 years? What's the sensible thing for me to do with it that minimises the chance of it being confiscated?
Well, and I think a lot of that wealth is obviously probably in an older generation. I think that's safe to say. And as you were discussing that, I was thinking like how this generational shift in sentiment has exactly changed. And I think it's been exacerbated in the last couple of weeks with the Israeli-Gaza conflict. And, as a millennial myself, and I don't want to say I have an opinion or thoughts on Israel or Gaza, but what's happening in the public forum is the support for Israel by a younger generation has, at least from what I'm witnessing, never been so weak.
Yep.
In that, I don't know if you call it support for Gaza or you know, kind of that younger generation calling for whatever it is has never been so loud as it is right now. And I think this is like a real moment in time to, like, you can literally start seeing the seas part here generationally of what the younger generation would like to see, why they're seeing that, where they're getting their information from, how they're forming those thoughts, compared to an older generation that, listen, would for the last 60 years have been nothing but support for Israel. I mean, I think this is going to be a real trying time for all Western societies to really get a grip or a grasp of what the voters actually want for the generations to come. It's just been really loud.
I think part of the problem is that, and it pains me to say, I've got two millennial kids of my own, one at the kind of front edge of that generation and one at the back edge of that generation. And, you know, what's happening in the world just fills me with so much sadness. You know, I never thought I'd see this kind of stuff going on that I'm witnessing now. But I have to say, I think a lot of the reason is when you talk about what this generation wants, and it's really difficult to talk about this stuff without sounding patronising. I'm absolutely not trying to be patronising. I have these conversations with my kids, right? It's not being patronising, but I don't think they understand what they want because they don't understand history. Now, I was lucky to grow up soon enough in the shadow of World War II to be able to talk to grandparents and understand what happened in World War II, understand what happened in Germany and leading up to World War II, the anti-Semitism, all the stuff that went on. I could talk to people with personal experience who I knew, who fought in that war, right, who fought for principles and fought for ideals. Yeah. That generation, sadly, the generation that lived through that and experienced it, and again we come back to stories, could tell those stories to the kids, to the grandkids, are almost gone. Right, there aren't that many around. You know, my dad's going to turn 85 in January. He was born in 1939. So the generation that remember World War II is basically gone. Right, and the teaching of history in schools now. When I grew up, we were taught World War II history, World War I history. The history that's taught today, those subjects have become more distant. There's less people around, and so they're not taught about that stuff. I think if you sit down, and there's been a lot of stuff on social media with people talking to protesters, you know, pro-Hamas demonstrators in London and New York, who are standing there with their placards, and you know, and look, God bless them, they're out there because they think they're fighting for a just cause, and they want to make sure that I don't stay silent on this. And then people are saying, okay, would you agree to this? Would you agree to that? They go, no, this is horrendous. This is horrendous. Well, this is Hamas's manifesto, effectively, right? And so there's this, and again, it's so difficult to not sound patronising. I'm trying desperately not to be patronising. So if I come across that way, I genuinely don't mean to be. But we have a generation who are very active politically, and that comes from a very good place. They want a better world, whether it's the green side of things or whether it's political situations in other countries. It comes from a good place, but it comes from a place in many cases which lacks the understanding of the broader issues and the understanding of history that might inform their opinion better. But we've moved towards entertaining that generation with shorter and shorter and shorter and more shallow content. Right? It's look at this guy falling over a railing outside a supermarket, or look at this guy on Facebook. And so it's nobody's fault. It's just the way things have evolved. But they've evolved. They've evolved in a direction that unfortunately exacerbates a lot of these problems. And the pendulum of progress always swings back and forward. We happen to be nearing, hopefully at one end of it, it will come back the other way, and there will be a need for people to understand history again.
Yeah.
But go back to World War II, right? After that, people needed to understand history. So after World War II, everybody said, we have to educate the children so this doesn't happen again. This cannot happen again. And so we are going to teach everybody exactly what happened here, and we are going to talk about why, and we're going to talk about the rise of the Nazis in the 30s and why. And you know, there's a tremendous podcast series called The Rest is History, which I would recommend everybody listen to. It's two English guys. They have a fantastic rapport, but they talk about a lot of these stories. And they did a 3 or 4 part series about the rise of the Nazi Party in the early 1930s in Germany. And when you listen to that, you can absolutely understand how it happens. If you think about it in a vacuum, you go, how the hell did that happen?
Yeah.
And then they walk you through all the steps that led up to Hitler's ascent to power in Germany, and you kind of go, geez, that's how it happened.
Yeah.
And it's happening again. So, you know, this lack of interest in history, this choice to teach a different kind of history because, hey, that was 70 years ago, it's not that important now, let's teach other history. It's so difficult, and it's so different, and it's so dangerous. But we will have to go through whatever this is to get to a point where, again, collectively, we say, geez, we have to make sure that doesn't happen again.
Right. And I'm thinking about my own education. Lucky enough, I had a grandfather that served in Asia in World War II. And so growing up, you know, not only was I taught that in those lessons in school, but I had a grandfather that lived it, you know, personally. And I also remember, you know, I'm thinking like books we used to read in school, like, you know, the Mouse 1 and 2 comics, you know, Animal Farm, like, you know, 1984. I don't even know if they make kids read those books anymore.
I doubt it.
You know, but there was a great book like 1931 that I read a couple years ago that talked about the same thing about the rise of the Nazis and what the Weimar Republic was going through. I mean, just, yeah, I think you're absolutely right. We have forgotten to teach history because it isn't as recent as we would have liked it to be. I wasn't really prepared to go down this conversation.
Neither was I. Hey, let's have a chat about mining stocks, you said.
Yeah.
Come on, it'll be fun, you said.
Yeah. Jeez. All right. Well, let's do a very hard pivot, Grant. Listen, one of the things I did want to talk to you about, this is I know you love sports. You love sport.
I do.
As do
unabashedly.
Yes. And you have thoughts and analysis and opinions about what is happening in dynamics of sport. Listen, one of the original idea I wanted to reach out to you and have a conversation was on the rise of Saudi Arabia. And it really trying to put itself as a global powerhouse in everything from sport, and we're also seeing it in mining and exploration in this sector. It's very large, it's very loud, and it's almost very exclusive. How did we get here? I guess I know how. I can understand how we got here, but the follow-up question is it so big, this move by the Saudis, that it could be a crash in that euphoria, or it can be like come down to earth type of move?
There will be at some point, because anything that moves that fast, there always is, right? It's just things don't move that fast smoothly without there being corrections. Look at any chart of any asset on the planet, and if you see a really sharp move in one direction, you'll see a correction back the other way. So there will be a correction in the future of the Saudis. I don't know where that'll come. I don't know when. I don't know when that'll come, but it'll come, and it'll be a test for MBS. It'll be a test for all the people who have kind of invested in a Saudi-led future and believe that if we throw a lot in with the Saudis, they're the rising power. And you only have to look at, you know, the history of the tallest skyscrapers in the world, right? They're always built by the dominant people at the time, and they always end up marking a top. The Saudis have been smart. They've tried to hide that by building the kind of longest building in the world, this Neom, right? They're going to build this thing that's 5 kilometers long, but they're going to build it on its side so no one sees it sticking up in the clouds. I don't know that's going to actually stop this particular indicator working. But let's take sport, because I think sports is an interesting place for many reasons. And as I said, I'm an unabashed sports fan, but I do a sports podcast with two great friends of mine, Roger Mitchell and Giles Morgan, who live and breathe the sports world, and so they understand the kind of nexus of sports and business much better than me. I'm a sports fan, but I've learned so much talking to them over the 5 years we've been doing this podcast. And what's happened in the last couple of years, as the Saudis have thrown unbelievable amounts of money at sport, there's the sports washing part of it, right? The idea that if we become integral to the world of sport, people will forget all about the stuff we've done with the Khashoggi to the world and all this kind of stuff, and we'll become household names and we'll be gentle and stuff. I get that, and there's a value to that, to the Saudis, in spending that money to try and soften their reputation in the world. So, but let's put that aside, because the Saudi money has come in very recently, and it's marked a top of sorts. What's happened before that is an enormous amount of private equity money coming into sport. And whether that money has come in at the team or franchise level, or the league level, or the association level, there has been a massive influx of private equity money into sport, and for the reasons that we know. The capital was free, right? And sports fans are a great audience, because no matter what happens, they are going to support their team.
Right.
And so you have this kind of captive, madly passionate audience who are going to stick with you through thick or thin. And what a great business model for private equity, right? Those fans aren't going away. They might complain and they might want the manager sacked, but they're going to buy a jersey next year, they're going to buy tickets, they're going to go to the games when they can. So you can understand why all that kind of money looked at sport and said, this is a great place for us to invest. And so they did. And they have then taken sport and teams and gone into a world of utter irrationality. Right? The fans of sports clubs, talk to the Glazers, talk to the Fenway Sports Group, right? The Glazers of Manchester United were saviours when they came in, and the marches happen against them every single week now. The fans have been trying to get rid of them for, 6-7 years now, desperate to get rid of these. And Bobby Charlton, who's probably the greatest, certainly the greatest Man United player of all time, arguably the greatest English footballer of all time, died the other week. And the Glazers, the family that owned the club that he served man and boy for 80 years, stayed away from the funeral because they didn't want to cause a distraction. That's the level of antipathy. Fenway Sports Group at Liverpool came in. Everybody hated John Henry. He's doing a lousy job. We've sold the club to the Americans. They hire Jurgen Klopp. They buy some great players. They win. And the Fenway Sports Group are heroes. What have you done for me lately? Right? So this money's come in, and they look at an irrational world, and they desperately need to make sense of it for projections and business models, but it doesn't make sense. And so they are now trying to bend sport to their will. They're trying to, how do we get rid of promotion and relegation in European soccer? Because that's,
Super League.
Right, that's the massive delta here. If we get relegated, none of our projections work. So we need to get rid of that. Good luck with that. I mean, it didn't work when they did Super League. I don't think the Super League's gone away. They're going to keep trying it. But they're trying to bend the world to how it needs to be for them. And so all this money now is trapped in sport, and it needs a return, and rates are rising, cost of capital is rising, fans are getting squeezed more and more by inflation, and suddenly a lot of these business models in the sports world don't look quite so appealing anymore. And so there are sports franchises that are quietly up for sale, there are sports franchises that are loudly up for sale. In come the Saudis, the Qataris, throwing money around. That to me is kind of the last exit liquidity for the people who are trapped in the sports world, because if you look at Live Golf, for example, and this is a perfect example, and I'm a big golf fan. I'm a terrible golfer, but I'm a big golf fan. I just read Alan Shipnuck's book Live and Let Die, and when you read that book, you realise under the hood of Live, yes, they came in and the money they were throwing around was obscene. The amounts quoted was ridiculous. And then you read the story that he's put together, talking to very well-placed people over the last 2 years, and now there is a real, we need to make this work. This has got to work. We can't keep throwing this kind of money at golf because we're not getting a return on it. the audience isn't there, the TV money's not there. So whether it's the first few tournaments they were chartering jumbo jets and flying everybody to the venues, and now it's like, no, you could pay for your own travel. Already we're seeing signs of this kind of, okay, we came in, we threw a ton of money at it, we didn't get what we needed. Phase 2 is batten down the hatches, be more prudent. And that wave would not be happening if rates weren't at 5%. They would still be doing the same things they're doing.
And how is all this affected by oil prices? And
This is the interesting thing. Yeah. This is the interesting thing, right? Because the Saudis have always played nice with the Americans ever since the agreement in '73 for the petrodollar, right? They've always basically bowed down to America's needs in terms of energy. If energy needs lower oil prices, they're going to increase production. America doesn't need them, and they need them. If they get away with it, they'll raise oil prices. You know what's happened this year with the price cuts that the production cuts that Saudi put in place, and then under pressure from the US refused to walk them back. They said, no, we're going to keep them in place for longer. You know, that signals one of the big shifts that we haven't talked about yet, and I'm sure we will, is the BRICS, the coalescence of this BRICS alliance. And so the power's shifted. And so now the Saudis, I think, realise that, okay, we've splashed all this money around, it's not worked, but at least we have a tap. Mm-hmm. We have the ability to increase our revenue by cutting oil production back, and we now have a whole bunch of partners in all the other oil-producing countries. The US has depleted the SPR, so they are weaker. Yes, they're an oil exporting nation, but higher oil prices are better for us in the Middle East than they are anywhere else. And if we need to do that, we can all come together, we can turn the tap up. The US is not going to be able to replace our oil. We've cut the Russian oil largely out the market. The dynamics in the oil market are very, very important, and they will be used for the furthering of different people's aims than they have been to this point. And I think that's a really crucial thing to understand.
Yeah, I had a little bit of an awakening, as a football or soccer fan, when the Saudis started buying, some of the top players, older into their careers, but were giving huge offers for those professionals, Cristiano Ronaldo's, the N'Golo Kante's, those players, and they decided to go play 1 or 2 years in Saudi. I was like, well, the MLS is usually where people go to retire. Now it seems like it's Saudi Arabia. Yeah. I know it's maybe equal, but I was like, what's the point? I didn't understand what the point was, because there's no coverage until a couple of weeks ago. Grant, I'm flipping through channels. I stop on ESPN, Sports Center, whatever it's called these days, and there's a highlight of Cristiano Ronaldo, some fantastic goal he had in Saudi. I was like, is this going to be the norm? Are you going to start seeing Saudi League highlights in the West?
I don't think so. I don't know, but if you look at if you actually look into this, you'll see the attendance of these games is pitiful.
Oh, it's awful.
Ronaldo's gone from playing in front of 80,000 people at the Bernabeu, the Camp Nou,
80 to 80,
to 1,000 or 2,000 people, right? And that ultimately is not going to create a culture in Saudi football that is going to bring anybody there other than for a big paycheck for a couple of years. They're not going to stay and try and build. Taking an audience from 1,000 people to 80,000 people is not doable in a player's lifetime. And look, I completely understand. If you're a sports star, whether you're a golfer on the Live Tour or you're a footballer who's gone to play for Al Hilal or one of the Saudi clubs, I get it. If someone comes along and says, I can make you financially secure and your kids and your grandkids the rest of your career, fine. The problem, I think, comes, and the problem a lot of sports fans have with it is, if as a player you come out and say, look, I couldn't turn this down, but to come out and say, well, we're going to grow the game, that's why we're going. It's not about the money. It's the kind of, people see through that right away. And so, Cristiano Ronaldo, I'm not sure how long his contract is. He must be approaching 40 now. I don't think he'll play past the end of his contract. The MLS is much more interesting. Messi's gone to the MLS, where he's getting paid Apple money, right, which is great. Yeah. He's got ownership in the franchise, and he's playing in front of big crowds, and he's on national TV.
It's a hell of a deal.
It's a hell of a deal. but I think the Saudi Football League will flounder. I don't think that's sustainable. And I think that'll quietly go away, just like the Chinese Super League did 10, 15 years ago when a lot of elderly European players went to China, lasted a year, and then the whole thing just quietly went away. I think the same thing will happen with soccer in Saudi. And I think the MLS is heading for a real boom period. I really do. I've long thought the US will win the World Cup in my lifetime. I still believe that.
I hope it comes to Colorado because the Rapids have been in business. But as the rise of the Saudi league, like as they picked off player after player, it's almost like the Logan Roy character had Ichiba's ears like, take the fucking money, to everyone. Yeah. Why wouldn't you go play for 2 years and
just be honest about it? I think there is nobody who would be upset with a player who said, "Look, I'm 36 years old. I've played for 15 years. I've probably got 3 years ahead of me. I can toil away in the English Championship, or I can go here, get paid $50 million tax-free, and secure my family's future. And so I'm going to take that deal." There's no argument against it. You can't argue that.
No,
right?
No.
You can argue on moral grounds and say you're throwing your lot in with. I get that. There's the politics of it, but no one is going to say that's completely unreasonable. No. Whereas you say, well, it's not about the money; it's about growing the game. No,
it's about the money. Yeah, let's be honest.
Yeah, whenever anyone says it's not about the money, it's about the money.
Just a couple minutes left. Here we are, mid-November. The last things that make you go. Was incredible, but that was about a month ago here, Grant. So just kind of curious what you have in store for us subscribers this month.
Well, we touched on it. I'm writing a piece called Bullet Time about exactly this, with a particular focus on Japan. All these bullets coming at us and markets just reacting slowly and people thinking it means that none of it matters. I think is so wrong. And one of the big changes is in Japan. If you've been paying attention to the new Bank of Japan governor, who's an academic, the first academic that's been in that seat, Kazuo Ueda, he's been talking about normalization of Japanese rates. And he's been talking not as it being a possibility, but he's been talking in terms of when we normalize rates.
Yeah.
And that's a big change. And the world hasn't really had to think about that for a long time. And the rise of the Japanese carry trade, the incredible amount of Japanese investment dollars that have gone overseas because there's no return in their own country, is likely going to start coming back.
Yeah.
And if that happens, if that capital flow, the capital flow of capital out of Japan overseas, not only does that capital start getting invested domestically in a bond market where U.S. Treasuries unhedged for the currency move, Japanese JGBs are performing better for Japanese investors already, which is almost unthinkable for investors. But not only will you see that capital being put to work in a country that's incredibly patriotic, has incredibly good companies which are trading at relatively incredible valuations.
Yeah.
But you could actually start seeing the selling of foreign assets to repatriate that money, whether it's done on a purely hard-nosed business decision, i.e. the numbers rack up much better investing money in Japan, or the government quietly goes to the life insurers, who are big holders of US Treasuries and US corporate bonds, and says, listen guys, we need some help here.
Yeah.
I go back to the post-Fukushima when Japan was suffering rolling brownouts, and a great story that just explains a lot about Japanese culture. They didn't have the power grid available to support all of Tokyo, and so everyone was suffering these blackouts. And the Prime Minister went on TV and said, look, we all need to come together and we need to wear sweaters and eat soup. And sales of soup and sweaters went through the roof. Japan's that kind of society. So if the tap on the shoulder comes from the government, say, listen guys, you need to bring that money home, it'll happen. And in fact, the data from August, the Japanese net sales of US corporate bonds, take a look at the chart. It's an extraordinary chart. It goes back 50 years, and the net sell was I think it was $117 billion, which is by a factor of maybe 10 the biggest net sale of US corporate bonds by Japanese investors going back 50 years. Now, we don't know if that was an outlier. I suspect it won't be that big again next month, but I doubt it's going to go straight back positive again.
Sure.
And so there's a lot of things happening in Japan that, to the point of our earlier chat, are happening in bullet time. People have said, well, the Bank of Japan's ended yield curve control, and look, nothing's happened. And the Bank of Japan have talked about maybe, does it really matter if they go from negative 0.1 on their policy rate to zero? Surely that doesn't make any difference. It does. It's going to make a tremendous amount of difference. And investors have this bullet time moment where this stuff's happening, all the news is starting to come out. The places that news takes Japanese equities, Japanese bonds, the yen, are pretty clear. And yet you've got this moment in time where you can actually look at them, position yourself, and be in time for everybody else to speed up again and suddenly realize, oh my God, the Japanese are going to normalize.
Yeah.
That changes everything.
Yeah.
So that's the piece I'm writing.
I look forward to reading it. I will look forward to our next conversation. Hopefully it's in person. Who knows?
I hope so too.
Yeah, we're
I think we've covered everything, right?
I don't know if we solved the world's problems
history,
or
football, golf, gold.
Probably the same conversation we'd have if we weren't recording.
Yeah, no, exactly right. That's why these conversations are so fun. It's just two guys chatting. We just happen to have microphones in front of us.
I really appreciate the conversation. I appreciate you being open and giving me all the time, even off the podcast, to pass crazy ideas to you and get your thoughts as a subscriber. I look forward to the next newsletter and all the podcasts. So thanks so much, Grant. I just can't thank you enough.
Trev, it's my pleasure, mate. Anytime. Really enjoy it.
The information presented should not be considered investment advice. Mining Stock Daily and its affiliates are not responsible for any loss arising from any investment decision in connection with the material presented herein. Please do your own research or speak with a licensed financial representative before making any investment decisions.